Okay, wanted to give an update on the VRB, the volatility range breakout. It was one of those beautiful days where the stop loss, okay, the risk on everything except crude oil. Crude oil didn't even kick out a signal this morning. But look at the stop losses on these. This, by the way, this is the E-mini. All right, so we just put in here the corresponding micros, the MES. If you're a CFD trader, depending on your broker, the symbol is SPX 500 or US 500, whatever. It's the ES. But look at the stop losses on today. This is one of those days where you knew you were going to get, well, you didn't know, but you had a really good indication that you were going to get a snap one way or the other because volatility was going to come in and take you for a ride, and it did just that. So look at the ES, the risk. This is a mini, only $58, so a little over a point on the E-mini, on the ES futures contract. Look at the NQ. It's only $147 risk. I've seen it smaller, but all of these lined up for tiny risk. $63 on the gold contract, $47 on the Russell, only $59 on the Dow, and only 147 on the Nasdaq. And look at the targets. So the targets are 3-to-1. So you can do the quick math. This is 3 times this number. This 174 is 3 times this number. What time is it? It's 11:09. It's 11:09, 23rd Eastern time. 11:09 Eastern time on the 23rd of July. Look at the targets. Target was 3-to-1, 3-to-1, 3 to all the way down the line. So you just multiply this number here, the risk, by 3. And then over here is the 5-to-1 indication. Now, I'm not saying everybody took it, but I did talk to a member this morning, and he said he got 3-to-1, more than 3-to-1 on almost all of these. And they were all bearish. So what does this mean? This means you don't even look at the long entry. Just don't even waste your time unless this rotates, all right, and something happens. And I'm not saying it can't rotate throughout the day, but at the opening, and by the way, these signals come between 7:15 and 9:05. These came between 8:25 and 8:40. So you got these. You could have been done by 9:30 before the market even opened, and people were wasting their breath looking at the opening range breakout, the antiquated opening range breakout. Ours is the volatility range breakout. It's based on an adaptive calculation on what's really going on. You're not waiting for the algos to just take out and chop you up all day or all morning. So there's the bearish. I want to show you what the results were. Had you waited for the 5-to-1. Okay, let me bring those over. This is the 5-to-1. So if you had traded everything, one contract, again, you would have got hit on the gold. We didn't even get a signal on the crude oil yet. We might get one later today. But if you would have waited for the 5-to-1, it's $1,870 on just one contract of each of these. So if you'd have done one micro, it's $187, and you're done before the stock market even opens. These were done, I want to say, by 9:15, all of these. So if you want to continue trading, what would you do? Let's take a look. You'd have gone over here to, okay, these are the pairs. You'd have just gone over here to the probability of a mean reversion. Now you're waiting. For intraday mean reversion. Let's take a look. Let's take a look at the actual outrights. So 74.30. There's even more juice in it. All right, because look, everything's pointing lower. Let's look at standard deviation. Everything's pointing lower. So it told us this morning at between 8, let's just say by 8:40, it told us we're going to have a down day. And then we get the gamma flip over here. Just a gorgeous, another beautiful morning. I want to look at one other thing. There was one other thing I wanted to show you for you Forex traders. Take a look at, this is a 1 year. All right. I'm going to take it down all the way to an intraday. For you Forex traders, the euro and the British pound are the 4.8 percentile. Okay, so if you flip this around, it's about a 95.2% percentile of the time they are this diverged. They're this far apart. So there could be an opportunity there. I'm not saying that's a trade recommendation. This is a 60-minute. Let me make sure this is a 60-minute. Yeah, there's a 60-minute, and it's in the 93rd percentile or the 7th. So if I flip this, okay, let's take a look. The 6P. So this would be 93%. Let's give that a second. Did I do that right? Yeah, I did that right. Here we go, 93 percentile. So it's just the inverse. British pound is just so far away from the euro dollar, so you definitely want to be looking trade opportunity there. Again, this is not an investment recommendation. This is just a mathematical fact. These guys are very, very far away from each other. There was another one I saw. Okay, that's the same one. Let me take a look at the euro yen. If I remember right, those were really, really diverged. I trade the futures contract, but if you're a Forex trader, there's a beautiful opportunity for you to look at right there. You're not looking at a candlestick. You're looking at the actual relationship between the yen and the euro dollar. If your schedule is such that you only want to trade in the morning, there's the VRB. Just a great day. Just a great day. Okay, so there's our update for the morning. Maybe we'll check back in later today.